Another challenge is that new and inexperienced traders may find it difficult to become familiar with direct access trading. Knowledge is required when dealing with processes and procedures such as making trade decisions and order routing. That is why I always recommend traders practice on their broker's simulator platform and ensure they are very familiar with the platform before they open a real account with that broker. In direct access trading, you are only one click away from making a dangerous mistake and blowing up your account, while if you are on the phone with an agent in a full-service brokerage, the agent may catch your mistake or advise you before executing your order. Please note that recently many brokerage firms have begun to offer both direct access and full-service services, so it is best to check their website and inquire about their services. For example, in Canada, Mo Bank of Montreal Investorline, RBC Direct Investing and Sitka Investors Edge are examples of full-service brokers that are generally not suited for day trading. On the other hand, Interactive Brokers Canada and Questrade offer both direct access trading and full-service brokerage services. In the US, some of the most well-known direct access brokers are TD Ameritrade, Lightspeed Trading, Interactive Brokers and Centerpoint Securities. Centerpoint Securities. Centerpoint Securities is a very popular broker for US residents, including Canadians with US addresses. As mentioned above, the Pacific Daylight Time rule applies, meaning Centerpoint Securities requires at least $25,000 to open an account. They are offering members of our community a flat commission rate of $2.95 trade, regardless of share size in your trade. This is an astoundingly low fee, compared to the typical $4.95 trade charge of many other brokers. If you do open an account with them, in order to receive the discounted commission rate, please mention in your Centerpoint Securities application that you are a reader of my book or a member of Bear Bull Traders. Centerpoint Securities offers DAS Trader as their trading platform, and I have provided further information about DAS Trader and trading platforms in general, a few pages along in this book. Interactive Brokers. Because Centerpoint Securities does not open accounts for Canadians, I am currently using Interactive Brokers, also known as IB. IB is also an inexpensive broker with discounted fees. It charges active traders such as myself $1 per trade of up to 400 shares, and as low as 0.0015 cents per share in larger volume trades. This is an incredibly low fee, especially compared to the typical $4.95 trade charge of many other brokers. Capital Markets Elite Group Limited. Capital Markets Elite Group Limited, not to be confused with the famous CME Grouping, an American financial market company operating an options and futures exchange, is an offshore broker that offers an excellent 6-1 margin for traders, higher than most brokers do. Since they are based outside of the US, the Pacific Daylight Time rule does not apply to their clients. This results in CME being an excellent alternative for those with less than $25,000 available for day trading. CME also uses the DAS Trader platform. If you live in the US, have under $25,000 available for day trading, and are looking for a broker platform combination which resembles what I use, CME is the ideal broker. They are currently offering a discounted commission structure of $2.95 trade of up to 1,000 shares to our members. This is also an incredibly low fee compared to all other US-based or offshore brokers. If you open an account with them, please email brokerage@cmelitagroup.com and mention code BARBULKMADE2018 to receive access to the discounted rates. I am currently maintaining a small account with them and will sometimes make trades in that account. Do remember that brokers will give you 3 to 6 times leverage. If you put in $30,000, you're going to have $180,000 in buying power. That leverage is called the margin, and you're allowed to trade on margin, but you need to be responsible about it. It is easy to buy on margin, but it is also very easy to lose on margin. If you lose on margin, your broker takes the loss from your main money account. Therefore, margin is a double-edged sword. It provides you an opportunity to buy more, but it also exposes you to more risk. There is nothing wrong with buying on margin, but you do have to be responsible. Margin is like a mortgage for your house. You borrow a significant amount of money and buy a residence. Banks will give you a mortgage, but they won't take any responsibility or risk on it. For example, imagine that you put $100,000 down and borrowed $900,000 on a mortgage from your bank to buy a $1 million house. If the price of your house goes up to $1,200,000, you still owe the bank the original $900,000 plus their interest. So the extra $200,000 is your own profit that actually came from margin leverage. You couldn't have bought that house without mortgage leveraging. Now imagine that the price of the house drops to $900,000. You still owe the bank $900,000 plus their interest. So the drop has hit your main $100,000 and you have lost all of your original down payment of $100,000. That is the other side of leveraging. Therefore, you need to be responsible about when and how much you make use of your account margin. When a broker notices that you are using leverage and losing money, they might issue a margin call to you. A margin call is a serious warning and day traders must avoid getting them. It means that your loss is now equal to the original money you had in your account. You must add more money or else your broker will freeze your account. If you need to know more about margin, leverage or margin calls, check the broker's website, do some research on the internet, email me, or ask other traders in your chatroom. Most day traders, including me, use a buying power of around $100,000. You'll remember that your buying power consists of your capital plus the leverage offered from your broker. As I mentioned above, my broker, Interactive Brokers, offers me a 1-4 margin. While leverage enhances returns, it also enhances losses. But since I don't hold positions for very long, almost always intraday, I do my best to minimize losses. CMEG is one of the few brokers that will give you a 1-6 margin. Your $5,000 in their account is equal to $30,000 in buying power for active trading. Trading platform. An electronic online trading platform is a computer software program that is used to place orders for day trading. The trading platform is different from the direct access brokers themselves. However, I see often that traders confuse these two as one. The trading platform sends and places your order at the exchange, so the direct access brokers can clear the order for you. Usually direct access brokers offer their own proprietary trading platform to their clients. The quality, charting capability, speed of the software, and many other features regarding the software varies significantly, which also of course affects their pricing. Many brokers offer their platform for a monthly fee, but they may waive that fee if you make sufficient commissions for the broker. For example, Interactive Brokers offers a trading platform called Trader Workstation, but it also allows you to use the Desk Trader platform. Lightspeed Trading also offers its own platform called Lightspeed Trader. Ph.D. Ameritrade's own software is called Thinkorswim. Centerpoint Securities uses Desk Trader as its platform. The table below summarizes some of the well-known direct access brokers for day trading. Please note that there are many more firms that are not listed below. Broker. Trading platform. Pacific Daylight Time Restriction. Based in Interactive Brokers. TWS or DAS Pro. Yes. USA Centerpoint Securities. DAS Pro. Yes. USA Lightspeed. Lightspeed Trader. Yes. USA Ph.D. Ameritrade. Thinkorswim. Yes. USA Scottrade. Scouter Delight. Yes. USA Trade. Option Shouse. Yes. USA Alliance Trader. Das Pro. No. Jamaica CMEG. Das Pro. No. Trinidad and Tobago Surrey Trader. Das Pro. No. Bahamas. From the brokers listed in the table above, I personally prefer Centerpoint Securities and Interactive Brokers as my broker and Das Trader as my trading platform. I also have a smaller account with CMEG at the time of writing. My broker, Interactive Brokers, offers their own platform called Trader Workstation or TWS, which I do not recommend for day trading. The Das Trader platform is one of the 4 Nasdaq Platinum Partner Order Entry platforms that offer the highest level of efficient execution and market functionality for online traders. As mentioned earlier, Das Trader is not a broker, it is only a trading platform, so I linked my IB trading account to it. When I enter my order in the platform, Das will send my orders to Nasdaq data centers and Interactive Brokers, as my clearing firm, will fill my orders. I pay my trading commissions to IB and a monthly fee to Das Trader for using their platform and providing me with a real-time data feed and level 2, which I will explain later in this book. Fast trade execution is the key for day traders to be successful. You need to be able to move in and out of trades quickly. If your broker doesn't use a platform or software that has hotkeys, you're not going to get in and out of trades fast enough. I can't tell you how many times I've been up $1,000 because all of a sudden the stock spiked. When the stock spikes, you want to be able to put money in your pocket and profit from it quickly. You definitely don't want to be fumbling with your orders. You need quick executions, which is why I highly recommend a good broker and also a fast order execution platform. Real-time market data. Swing traders enter and exit trades within days or weeks, therefore end-of-day data that is available on the internet for free is sufficient for them. But day traders need real-time intraday data because they enter and exit within a few hours and often within a few minutes. Unfortunately, real-time market data is not free, and you need to pay a monthly fee to your broker or your Das platform depending on the type of market data you need access to. Which market data you should buy depends on the market that you are trading. If you are planning to trade in the Canadian market, you need real-time Toronto Stock Exchange data. I largely limit my trading to the US markets because of its high volume and volatility, therefore I need Nasdaq real-time data. Unfortunately, without real-time market data, you cannot day trade properly. Contact your broker and ask for the real-time Nasdaq TotalView Level 2 data feed. You may need to pay a monthly fee for your data depending on the broker. Nasdaq Level 2 and BidAsk. As part of your data feed package, you will have access to Nasdaq Level 2. Level 2 can provide important insight into a stock's price action, including what type of traders are buying or selling a stock and where the stock is likely to head in the near term. Level 2 is known to be a leading indicator, which means it shows activity before a trade happens. Moving averages, charts and most of the other indicators are known as lagging indicators, meaning they provide information after the trades take place. Level 2 is essentially the order book for Nasdaq stocks. When orders are placed, they are placed through many different market makers and other market participants. Level 2 will show you a ranked list of the best bid and ask prices from each of these participants, giving you detailed insight into the price action. Knowing exactly who has an interest in a stock can be extremely useful, especially if you are day trading. Figure 5.1 below is what a Level 2 quote looks like. Figure 5.1- example of a Nasdaq Level 2 for United Health Group in the middle of the trading day. Note that the number of shares is in hundreds. Whenever the market is open, there are always two prices for any trading stock, a bid and an ask. A bid is what people are offering to pay for that stock at that moment. An ask is what sellers are demanding in order to sell it. A bid is always lower, and ask is always higher, and the difference is called the bid-ask spreads. Bid-ask spreads vary for each stock and even for the same stock at different times of the day. The image in figure 5.1 above shows us that someone is offering 200 shares x 100 shares lot of UN for $157.43 on the ask side through NYSE. On the bid side, there are various market players who are willing to buy shares of UN at a price of $157.38. Traders who want to buy UN at various prices are sending their bids through market makers to the bid side of the level 2. The most important information you must take away from level 2 is the bid-ask spreads. Spreads are higher in lower volume traded stocks, as the market makers who dominate such stocks demand higher fees from those who want to join their party. The bid-ask spreads are likely to be small, perhaps only 1 cent on a quiet day in an actively traded stock. They grow wider as prices accelerate on the way up or down and may become huge. I have seen up to $2 after a severe drop or a very sharp rally.